Ramdevji, then tell us what excites you. I mean, if we simply, try and marry the two where there is underlying momentum, growth, business potential, and valuations have not turned completely sort of out of whack. Where is that, that space in the market, if you see it at all?
Yeah, so Surbhi, one of the things is that newer opportunities are coming up. Like say, all these digital companies were kind of not down and out, but were out of favor. So all the PSUs were another segment which was completely beaten down at some point of time and became darling of the market. Right now, say banking sector is completely out of. I mean, it was darling of the market for decades, and that's where the FIs put a lot of money. And today it has not done well because they have also sold a little bit of it. But when you look at the fundamentals, I mean, I was looking at my presentation, and there one of the slide is about the quality of NPAs or quality of assets, credit quality in the banking system has been, I think, right now it is the historically the best, and it is becoming even better. And if you look at it, while the business is growing at 15-60%, and quality of asset is the best, and it is likely to remain better as we go forward, and yet the valuations are at the lowest. So I think the market does this funny thing. And that is what throws you opportunity. So I would think that you have to be a little contrarian or you have to buy into something which is unpopular, but you have conviction. So that's what, and it's not that all the sectors, 50-60 sectors, it's not that all of them are in unreasonable valuation. There are 10-15 sectors or segments which are reasonably priced or underpriced. I think that's where you have to pick up the stocks.
And which one of these would you like the most? You're saying there are about maybe 10 to 11 segments at least, which are still reasonably priced. Out of these 10, 11, which would be the ones that you like the most, Ramdev?
I would look at still BFSI in that capital market, as I also have told. Capital market still looks very exciting. You look at last month Demat addition, it was almost all-time high, 4.5 million. So the way market is expanding, the way flow is, I think capital market guys, they're still, I think the growth in the segment is going to be quite significant, and it is going to be very high quality, asset light. So I would think the banking, the private sector banking and BFSI, they look to be good. Even insurance is looking up very well. But there are other segments in manufacturing and all. One can look at it, but since I'm not that clued on to day-to-day stock picking, I would think that this sector is close to my heart and they look to be good.
And it's likely, and for the capital market space, a lot of the chatter was, regulators trying to slow down, trying to put some brakes, right? Through all these regulations in the F&O side. And
yes.
You think that is now, that bump is behind, or what's speed bump, not a bump, but a speed bump is behind, or does that cause any worry at all? Could there be more coming? What's the sense? Taxation went up, the market hardly noticed, but I mean, it is happening, right? Some of these speed breakers are being put in.
Yeah. So I think regulators are putting some restriction on the expansion of the F&O market, but there is a lot of see. It is about the energy, the participation. The money is coming in the market now. Whether it goes into F&O, whether it goes into cash market. See, once the restrictions come, then only players will decide what is going to be their new game, because the money is there, money is pouring in. So I would think that with a little break in terms of volume expansion for a quarter or two. And market will get adjusted to the lower earnings, lower volume, whatever. But I would think that in a year or 2 years' time, even with the new restriction, we'll see all-time new high in terms of revenues and profits from the players. Because regulators can restrict the volumes or who should play or what should be the lot size and things like that. But what the entrepreneurs will do in response to that is yet to be seen. So I would remain, if the business is growing, participation is more, funds are flowing, I would think the capital market in general, despite regulators' concern, will do very well.
Right. Going back to the Zomato point itself, quick commerce as an opportunity is a large opportunity. Yeah. Everyone's talking about the sort of, runway for growth that there is, but increasingly there are more competitors raising a fair amount of funds as well. Flipkart started Flipkart Minutes, for instance. Zepto's raising funds at breakneck pace out there. So do you think the strategic significant advantage of Zomato in that will continue, or at some point it becomes a 2-3 player market?
Even today it is 2-3 player market. I mean, in quick commerce also, you have Insta, you have Blinkit, and now Zepto is building up very quickly. Zepto is presenting tomorrow. A very wonderful story to listen to. There will be a lot of excitement out there. So again, they're all bit away from the serious money making, but the pace of growth, 100%, 80% compounded. I think the compounded growth of about 70, 80% or even 100%. I mean, in just 5 years' time, you look 3 or 4 years' time, you look very different. And once the operating leverage starts working from negative 2% or 3% net margin to 2%, 3%, 4% net margin, you can do the numbers on a large turnover of $10, $15 billion. The numbers will. And another thing is that it is going to be a very asset-like. So free cash flow will be very, very large. Economic profit will be high. So this is a completely different environment, different type of companies, different growth levels, different free cash flow, and a very sustainable, visible kind of demand in growing economy. Today we are a $4 trillion economy. In 10 years' time, we will be $8 trillion economy. Now in 8 trillion, your consumer demand will be at least 3x more than current levels. And the players will be only 3. So the growing demand, consolidated playing field, and then the margin expanding. People want convenience in India. So I think it's a very exciting time for these companies.
Adit of Zepto had said that in the next couple of years, they'll be bigger than DMart. I just wanted your thoughts on DMart. What are you thinking about DMart? Because Blinkit has said they are not gaining any share from DMart, or they are not eating into their shares. The segment of the audiences are different. But if consumption has to increase and value-conscious consumption has to increase, is DMart an opportunity currently?
No, DMart has its own customer base, and I think still they have not covered the geography of the entire country. So, I mean, if you go to developed market also, I think this organized format stores, they have a role to play, because ultimately this quick commerce, online buying and all, it can take care of some portion for the convenience, but the bulk of the buying happens from the stores. So I think DMart has a different segment, and they will keep doing well. Just that DMart might be growing at 15-20%, where these guys are growing at 80-90%. And 80% growth is not 4x. 80% growth is like 20x. So that has to be understood in the mind that 4-5 times more growth on the top line and bottom line is not 4x for the valuation.
Ramdeo, I want to get your attention back to Ola. I mean, how can we not, right? And I think our viewers will really benefit a lot from your wisdom. You've seen this for decades and decades, right? So now here's a new business. And I guess timing is also very interesting, because we were just discussing Zomato. Zomato has proved to the street that good businesses can come. They can come making losses, but they can turn around. They can have sustainable growth. Maybe that's also having a rub-off effect on Ola. Apart from the scarcity issue that you described, right? I mean, to get good businesses at a good pricing. They offered this business at 76. The market is now almost giving them 150. Is it getting excessive? How should investors look at Ola?
Subhi, I'm sorry to say that, but my knowledge on Ola is very limited, except that I know that they are clearly leader in their field, and in two-wheeler particularly I have seen being number one is very important. So on the electric mobility, they are clearly number one, and they have very dominant share, and so that dominant share is what market is very excited about, because still the transition from IC to EV is limited, and so I think at some point of time, as the transition picks up from petrol vehicles to electric vehicles, I think they are there to encash, and their positioning is so strong that it is going to be extremely difficult for anybody else to dislocate them from the current position. And that's what market is saying, that okay, you are number one and I want to be in my portfolio even if it is a little expensive. That's what I hear. I don't think the current fundamentals per se would justify the price one is paying right now.
Ramdev, let me ask you about what this means for the traditional big boys, right? And you have been one of the earliest, I think, persons who picked out Hero. It was one of the stocks many, many years ago that you singled out. Now, for Hero Moto itself, the landscape is really changing, right? You have Ola with this competitive, fierce intensity. They're getting into bikes, and their bike is starting at 75,000. There is Bajaj, which is always a challenger. Bajaj is saying we've got a CNG bike now. They want to also make inroads into the traditional stronghold of 125cc below, which was Hero. So for Hero Moto, a company that you've loved and liked and tracked for so long, what is the road ahead looking like?
See, for them, both the sides are, see, one of the things is that now the competition in the IC side is not coming in the sense that new competitors are not coming. There are three guys, Bajaj, Hero and TVS. They themselves are kind of fighting among themselves. So if the market expands and the transition to EV remains slow, in that case, they have the entire booty amongst themselves. And then on top of it, the export market is also looking up. So I think they have, and also at some point of time, they'll also become a dominant player on the EV side. It's not that EV is left out to Ola or everybody has a EV offering, and I'm sure they will give tough competition. But this is the problem of the winner's curse. When you are so good with the old technology, it becomes very difficult to get into a new one.
Yeah. Ramzuji, let's wind this conversation down. Politics is back, right, on the anvil. The last election results did barely sort of caused any breaks, but now we got state elections. Although we don't have the date for Maharashtra yet, but we do have it for Haryana, J&K.
Yeah.
What's your sense? Do you think Maharashtra is a big one? Maybe it'll happen a little later, but they'll have to do it because the assembly session ends on the 25th of November, if I'm not mistaken. So they have to do the elections, I think 1st of October and then maybe mid-October, maybe a little later. What's your sense? Could it be a market moving event in that sense? Because it's not very far away.
I would not be. I don't think so. I mean, if the central election where the ruling party lost its majority and we got into some kind of a coalition government, that didn't deter the market. I mean, what happens to us? How does a small one state election matter? In the sense that yes, it is important politically, but as far as the stock market is concerned, I think we have seen and got over it much bigger event than what is ahead.
Thank you very much for joining us, Ramdev. We have a fantastic conference and we'll touch base in a few days. Thank you very much.